Everybody, this is John. Welcome to the free video. Tonight I want to focus on a couple of sectors. Namely, first of all, let's look at the financials. So financials have a big squeeze. If we back up here a little bit to put it into context, you can see that while the financials had a really nasty time here at the beginning of the year, okay, in fact they were kind of the victim of some flash crash stuff. That was back in August, if you guys remember that. Since then, they've recovered, but have just lagged, and it's put into question some of what's going on, frankly, in the rest of the world. Now, as we come into the election, they actually are poised. We've got a squeeze here. They're actually acting well. They're helping. They're kind of the backbone of the markets right now, as a lot of other sectors are falling apart. Well, falling apart is a strong term, but XLP, consumers, I mean, that's kind of crazy. This is Starbucks, Disney. And this brings up an interesting question here in terms of what are the consumers doing with their money? Is everybody just glued to the television, watching CNN, full of anxiety, waiting for the fate of their own future and the nation on the elections, okay? Or, is there something bigger going on here? Well, I would say, like, if you dive in here to Disney, right, okay, either apparently this is a good time to go to Disney because the crowds are low, or you go to Starbucks. Maybe at this point everybody's juicing instead of getting some coffee. But it does show that the consumers are kind of taking a pause here, okay? But the banks are excited because maybe when this elections is done, we can start raising rates again and they can start making some money, okay? XLK, which is the technology sector, looks great. You've got Amazon, Google, Facebook. They're all making new highs. They're raking in the money. You can see there's another squeeze setting up here. But last but not least, and most importantly, energy is back. And obviously, after crude oil has been taking a bath, it's been holding up really, really well. It doesn't care that the dollar's rallying. This is a supply and demand kind of a shift. Prices came down, wiped out all the weak hands. The strong hands are back in play. I'm not looking for oil to go crazy here, but could we get $55 to $60 oil? Yes. And does that help the stock market? Yes. Okay. Now, it doesn't help consumers. Falling oil puts money in consumers' pockets. Rising oil takes it away, and there's probably some tie-in there. Okay. So at the end of the day, biggest things I'm looking at right now are what I would call pre and post earnings plays. Okay, two examples of that: Netflix in the trading room. This thing had a 2 standard deviation move with earnings. Okay, so that was for those of you that don't know, when that happens, you typically see a move up to sideways for the next 4 to 6 trading days. So this is something we did in the room where this is after earnings. We set up these trades, okay, and we're looking for a little bit more strength in Netflix. But the other trade, and these are the ones that are coming up, are pre-earnings trades. So Google is a good example of a pre-earnings trade setup, and this is one where we've got put spreads and long calls to help offset each other to make money going into earnings. Okay, so that's kind of the name of the game right now. It dovetails nicely because pre and post earnings plays are going to be the only thing that's going to happen that's interesting prior to the election, because all the other markets are going to be in hurry up and wait mode to see what Donald Trump is going to say next. Okay, that's what we got, and let's take a quick look at this. I wanted to let you guys know about a free webinar coming up. So for those that are familiar with Tucker, Tucker focuses on anybody who's already kind of working full-time but wants to trade part-time to generate income. That's his niche. He does a really good job at it. So he's going to be doing a webinar called Full-Time Profits for Part-Time Traders. It's going to be Thursday, October 20th from 7 to 8 Central Time. Okay? He's got a very simple system, very beginner-friendly, and it's a 15-minute-a-day process that he kind of goes through, runs a scan, sets it up, and he's done. Here are some of the things that he's going to cover. Why so many traders struggle. Okay, so he's been doing this a long time, and like me, everything he's learned firsthand through his own experience. How to get objective, thoroughly back-tested signals. Okay, and that's the beauty of this. It's not based on, oh, what do I think might happen with this? It's, oh, this is what's happened, 83 times out of 100. How to find high probability trades, even if you've never been consistently profitable before. The secret to having peace of mind while you trade, okay, because that's tough. Our brain comes in and starts doubting what we're doing. That can be frustrating, especially if you're just starting out. How to quickly find entries that meet strict criteria and eliminate low probability signals. Knowing your entry, exit, and stop automatically before you put it on a trade. Biggest question I get, where should my stop be? Here's an automatic way to do that. A simple money management formula that you can just follow without thinking, i.e. position sizing and different things like that. Or big focus on big trends and a focus of 35 to 50% annual returns. Anyway, again, free webinar this Thursday. Come on in, take the information that you can learn and make it your own, bring it into your own trading plan, and it's always good like that. Tucker's got some great stuff. All right, guys, have a good night. See you at the next update.